trader in our community that broke into the top 0.1% of prop firm traders. In this video, I explain how statistically difficult that is to achieve, and I break down what are the top common things that this 0.1% of prop firm traders are doing that everybody else isn't. So we just got this notification in our Discord community with a member of ours by the name of Forex, and he recently just got a payout from FTMO, and it says that he's now eligible for the scaling up plan. Now, Sai is one talented trader. He's actually now been funded $600,000 worth of trading capital, and he's never lost a funded account, which is pretty impressive. And he also mentioned that he just qualified for FTMO's scaling plan, which is extremely difficult to do. In order to qualify for FTMO's scaling plan, they evaluate your account after 4 months. It looks for 4 consecutive monthly cycles where the average is at least 2.5% in net payout each month. And if you're able to do that, then they'll increase your capital by 25%, and they'll also increase your profit split ratio to 90-10. So how difficult is it actually to do that? Well, we'll take a look at a couple statistics from a couple different prop firms, and then I'll break it all down for you and then share with you what the top 0.1% of traders are actually doing. Now, if you see this from My Funded Forex, they basically say you have an 11% chance at becoming a funded trader after purchase, and of the 11% that become funded, only 40% actually end up receiving a single payout. So ultimately, you have about a 4 to 5% chance of receiving a payout after purchasing. Now, this data comes from My Forex funds that basically says that there's a phase 1 pass rate on their prop firm of about 19%, and then there's a phase 2 pass rate of about 42.18%. So if you multiply 19% times 42%, you're going to get about 8% funded ratio. So with all that being said, how difficult is it actually to achieve this scaling plan? We had a brilliant member inside of our group named Prit break this down. He says, hope I worked this out kind of correctly, but ballpark, you're in the 0.1% of people who scale their account. The stats are roughly if 100,000 people actually bought an evaluation or challenge, 10% or so, numbers maybe a little bit less than this, actually get funded. That'd be 10,000 people. 5% actually get a payout, which is 5,000 people. And of those 5,000, only 1 to 2% actually make it to scaling their account, which is about 100 people, which puts you in the 0.1% of the original 100,000 people that signed up for a challenge. So what are these people doing differently than the vast majority of people that never even make a funded account? Well, now for one, Forex happens to be an algorithmic trader. He's actually using our Titan X robot inside of the prop farming blueprint, which you can see more about at propfarming.com. And if you want a full breakdown of exactly his strategy and how he trades algorithmically, then join our Discord server and you'll be able to see a full breakdown where we did a live call of exactly what he's doing. And I realize that the majority of you guys are not inside of our private Discord community and trading with our algorithm, but I still wanted to provide value and give you some insight into what these 0.1% of prop firm traders are actually doing. So here's some interesting insight from My Forex funds that basically said, for those that had actually passed and reached a live account but ended up failing their account before their first payout, the majority had at least one trade on US 30. In February, according to My Forex funds, the most profitable pair was actually Euro US dollar, and the least profitable pair was US 30. The second least profitable pair was NAS 100, and the third least profitable pair was the JUR 30. So according to this data, it looks like as an overall, indice traders are not doing as well as people that are trading other instruments. They actually said that the majority of payouts that got over $20,000 actually were from Forex and metals. We also learned that gold traders tend to make more profits when the market is slower but not dead. For example, in Asia and Europe, in the crossover is the most profitable period to trade gold. Now, we do happen to trade gold quite a bit, so this is interesting to see. It also says that Forex traders make more profit when they hold trades for longer than 6 hours. Also really interesting, there's no long-term profitable trader in the My Forex funds database that trades through news announcements. And it goes on to say that most users who see success on one news announcement end up losing their account on the second news. Another interesting thing that they said is the traders with the highest payouts often have the least amount of trades on average. They also have some statistics here about people using stop losses, which is kind of obvious. They basically said that 20% of them didn't have a stop loss, but of that 20%, 95% of them closed or lost trades relatively quickly. Other interesting insight says that the more exotic the pair, the more likely the trader is to lose. Now, also, we see some interesting statistics here from Funded Next, which is another prop firm that basically talks about the relation between payouts versus the number of days traded in a week. So if we take a look at this, you can see that the people that trade just one specific trading day have ultimately significantly less number of trades, and only 8% of people do this, but they make up 45% of the payout percentage. Traders that trade 2 to 3 specific trading days ended up having 1,330 trades, which made up about 38.72% of the traders, and their payout percentage was 33%. But traders that traded 4 to 5 days, they obviously traded significantly more, but they only made up 21.5% of the payout percentage. So what can we learn from this is actually trading less number of trades and on less days seems to have some sort of correlation with a higher payout percentage. And this also could ultimately be people get their funded account, they just take one trade, and if that trade happens to be a winning trade, they just take their profits and they don't trade anymore until they actually receive that payout, and that could be skewing the data, in all honesty. Hey, if you thought this was interesting and you'd like more data-driven analysis on what makes successful traders and unsuccessful traders, check out the video on the screen right now. It basically talks about why very few number of people actually make money trading Forex and the top 10 mistakes that you can learn from driven by data so you don't make these same mistakes. Go ahead and check that out right now.